What's going on, YouTube? This is your average traders back again, and wow, what a week it's been. We've had what seemed to be a sell-off, which seemed to have some legs. We started to really come off. We've got a lot of headwinds still facing us right now, but that sell-off was met by one epic two-day rally. Today we finished up over 500 points in the NASDAQ 100, led by Apple. Apple has been the star of the show for the past couple of sessions. Even during the sell-off, it barely went down, and it was met by really strong buying. And so it's been a pretty eventful market. And again, we've had a lot of headwinds, and so I thought let's have a look into what happened last week, how we've started this week, how everything has changed, and let's just delve in right now. So I mean, last week we had a multitude of factors that that basically were weighing on this market. And so, number one, the Fed Chair Powell, or the Federal Reserve in general. So basically, the Fed Chair Powell was making comments last week and started to become a bit more hawkish, saying that it's appropriate to consider wrapping up taper a few months sooner, and we'll talk about speeding up taper at its next FOMC meeting. So the word of the day for the Fed had been the word transitory, and now that Powell's been elected for another term, we're starting to see a bit of a different tune in his voice, in his language, and we saw that reflected in the markets last week, where we did see a lot of the growth names really being hit. And in terms of some of the other comments he made, obviously we have the Omicron variant that has hit the market, which doesn't seem to be as potent as the market had initially feared, and that is part of the reason why we're getting this epic two-day rally that we've had over so far this week. But back last week, Powell did note that he has to assess if Omicron will impact the policy decision, but for now, Omicron is a risk, but it's not baked into forecasts. And then coming back to that transitory term, Powell did note that it's a good time to retire the transitory term regarding inflation. Transitory means not leaving a permanent mark on prices, and the risk of higher inflation has increased, and higher prices are generally related to supply and demand issues. So this was the number one thing, firstly, that did really put a damper on the market. We did see yields rise, stocks fall, and especially in the growth space, where we did see the Russell. The Russell actually from the highs was down well over 10%. And I think that's the first time I can remember this year an index being down 10% from the highs, because we haven't really seen that in the S&P or the NASDAQ or the Dow. So we did see quite a bit of a move in the Russell, which definitely showed through in my portfolio, where I saw a lot of these names getting absolutely hammered. It was not pretty at all, what it was last week. But then on top of that, we had the Chinese increased scrutiny. So it all got kicked off. Well, it was well in the works anyway, but DD had confirmed the rumors that had been swirling around over the past couple of weeks, that they are beginning preparation for a Hong Kong listing, and they are working on delisting in the US. And they're set to target a filing for the Hong Kong listing near March 2022, and that the board supports a plan to delist from the NYC. So number one, we've seen so much regulatory pressure back on the Chinese side and the US side regarding these Chinese stocks, and all in the name, partially for security. We've got the Chinese government saying that they don't want foreign entities having access to data held by these Chinese companies, and vice versa. We've got governments saying that some of these Chinese companies are a security risk, a la going back to the Trump era, where we saw TikTok. TikTok was in the news for so long because of so-called regulatory concerns. So we're going back and forth between the governments. And then we did see the SEC come out adopting a rule last week that would require US-listed foreign firms to disclose whether they're owned or controlled by a government entity, and will provisionally identify such companies for 15 days in which time they will be allowed to provide contradictory evidence. So this again is another headwind in a lot of these Chinese names, and I think DD just thought, all right, this is enough. Let's just let's delist. It's too much more trouble than it's worth. And funnily enough, as soon as DD did announce that, we did see a report that some of DD's apps on Apple App Store in China had been relisted. So, what does that tell you? Pat on the back by the Chinese government saying you're doing what you're told to do. Here you go, get your apps back. So it's been pretty wild in terms of that, and that was a catalyst for that huge sell-off on Friday, with many of the major Chinese ADRs trading down huge and at multi-year lows. DD was down around 22%. Alibaba went below 110. Baidu was down over 9%, pretty much. The K-Web, which is CranShares Hong Kong Internet Index, which got Tencent, BABA, Baidu, all those big names, that was down over 5%, 6%. So it was a right mad sell-off that we had on Friday. And then we did see a little snippet from Barron's, which did actually write this about a couple of weeks back, but I thought it would be worth a mention, saying that a regulatory crackdown on China's best-known companies such as Alibaba Holdings and DD Global, as well as for-profit education providers such as New Oriental Education and Technology Group, has been a wake-up call for investors and contributed to a 13% decline this year in the MSCI China Index. And Beijing's new emphasis on common prosperity to tackle rising inequality and its efforts to rein in China's debt-laden property sector and meet carbon emission targets have also roiled its economy and stock market, pushing the giant property developer China Evergrande Group to the brink of bankruptcy and sparking the country's worst energy crisis in at least a decade. So, I think that pretty much sums it up quite well, some of the issues happening in China. But lo and behold, the rebound, which has been led by Apple trading at all-time highs, traded above 170, closed above 170 today. We had pretty strong breadth pretty much all the way through the market today. And we did see after the close, we have seen another bump up, and we see NASDAQ futures up about 54 handles right now. And reportedly, Apple had told suppliers to accelerate its iPhone production in November to Jan period, with supply chain woes would leave Apple about 15 million short of its 230 million iPhone production plan at the start of 2021. That was according to Nikkei. And so, we had rumors just last week in regards to Apple, noting that they were going to fall short. That demand was sort of waning, and now we have this saying that they want to accelerate iPhone production. But either way, Apple's trading like a treasury right now. It seems to be that even when the market is selling off, people are going into Apple more as a safe haven play more than anything. And that's why Apple's still pretty much at its all-time highs, and it's been propelling this NASDAQ up massively. And some of the other notable news today, we had Intel, which also provided a boost to the tech sector, saying that they were looking to spin off the Mobileye unit, which is their self-driving unit, which is said to be worth, in a spin-off, around $50 billion. Bear in mind, they did acquire Mobileye for about $15 billion back in 2017. So it's been a triple there for Intel, should it IPO around the $50 billion range. My guess, consider, taking into effect the way the market is right now, we could see, much, could be a higher valuation than that. But so we have that. Yeah. So, today we saw a real big rally. If we look at the market today, the breadth today, it was incredibly positive. It was something like 7-1 advances the decliners. If we look at the S&P 500 components right now, we can see the breadth here. We saw Microsoft up 2.7%. All the FANG names were up huge. Nvidia, $800 billion company, again up 8%. So we've seen these huge, massive market cap companies just trading up massive today. which has been a big, sail in the winds for the Nasdaq. Tesla was up over 4% after falling back below 1,000 yesterday, back above 1,000 today, closed at above 1,050. Yeah, we saw a couple of red spots here for Comcast and some of these more defensive names like Walmart, Procter & Gamble, Pepsi. So some of those stocks didn't really get the love. But in general, we did see some, the banking sector was rising. Tech was a leader. Overall, energy got a boost as crude oil popped back above the $70 mark. So it was a pretty strong day in general for the market. And so what am I looking at right now? Well, that's the question. I think if we look back to some of the trades I've made, a couple of trades I made, one today, I made one, both of these today. And firstly, I played BABA. BABA has been a bit of a tough one. It's had such a big move. And again, I was hesitant to put on this trade, but the IV rank is so high. It was actually on Friday around 156 and it came down to 85 and now it's around 51. But I put on this trade when it was IV rank was 85 upon an iron condor. But selling the 122, 120 put spread, buying the selling the 138, 140 call spread for a credit of around 126, risking $74. And I thought pretty much that's about a $20 wide spread on a $120 stock, which is about 18%. So I thought I got a range of about 17, 18%. I'm actually risking roughly about 35% for potential 65% profit target. And realistically, I hope to not hold this anywhere near to expiry. I'm just hoping that we get some forex contraction, and hopefully I could, nick about 20, 30, 40 cents out of this. And if I can get it back for about 80, I'll take that. 80, 70, 60 would be ideal, taking about 50% of the max profit. So again, I'm trying to take advantage of the mega elevated IV in some of these Chinese names, and in this particular case, BABA. Another stock, another trade I put on today, another option play on DOCU. As you may be aware, DOCU had an incredible move lower after their earnings. The stock was trading around 230, had been at a high above 300 and dropped over 40% pretty much, and dropped to a low of around 132 for DOCU. So I thought it did bounce off that 132 mark. We got to a high of around 147 yesterday, and today we sort of came off a bit again. It was one of the laggards in this massive bull market, which was quite annoying. But I put on the 130 put, buying the 125 put in this bull put spread. Took in a credit of $1.55 for a risk of about $3.45. So this short strike is just below the low on Friday, I believe. So hoping that it can find some support here. We are down well over 50% from the high, 50-60% of the high. And although the earnings top and bottom line was still a beat, it was the billings that was a bit light and the guidance that was a bit light, but not by much. But still, their product is great. I understand there's the competition from Microsoft and a lot of these other things, but everywhere I go, I can't imagine we're going to be in any scenario where we're going to be going back to signing forms manually when we've got products like DocuSign and their offerings, which I think is definitely market leading. But again, playing this short term, so I did not put on the expiry for this one, but looking for the deck 31st. Was it the deck 31st or the Jan expiry actually on that one? So again, I'm looking for that's trading at an IV rank of about 47. Hoping for a bit more vol contraction, hoping for it to just settle. I don't even mind if it just drifts lower, drifts higher, but as long as the volatility gets pulled out of that thing, then it will work out work out well. So those are the two trades that I put on, and we'll see how that plays over the next couple of weeks and see how that all works out. And obviously, we'll keep you in the loop on what's going on with those trades and the more that I put on. But anyway, that's all for now. We'll see if this market rally can continue over this next few days and into Christmas. Is this the start of the Santa Claus rally, or is this a dead cat bounce? Who knows? We'll find out. But it'll, let's hope we continue to get some of this volatility. It's great for trading opportunities. But till next time, we'll catch you later.